The market has been hot lately, with the S&P 500 reaching its highest levels ever. And then we've got the chip stocks, actually the tech sector in general, continuing to increase. Bitcoin has been on an absolute tear. Well, not yesterday, there was a little bit of a dip, but generally speaking, year to date, doing very, very well. But there are still opportunities out there. There are some stocks right now that are relatively cheap and present big future potential. So let's talk about some of these in today's video. But as always, this is not financial advice. Do your own research and make your own investment decisions. Some of these are definitely riskier than others and will not suit everyone's risk appetite. Some of them I've covered on this channel before, others I've never spoken about previously. But just before we get into that, I asked you guys if you had any interest in me live streaming on this channel. The reaction to that was very, very positive, so I will be starting live streams very soon. I've also noticed that a lot of you have been suggesting which stocks you want me to analyze and look into. So what I'm going to do is, if you become a channel member, you can submit to me during the live streams which stocks you want me to analyze, and I will do that during the lives. Enough about that, let's move on to the first stock today. The first one up is PayPal. This is a stock that I have been speaking about on this channel for a while. If you look back through previous videos, you'll see that this one comes up fairly recently. And it's because I'm seeing big potential in this stock. In the past few days, PayPal has actually been jumping up quite a lot. You can see here it's been on a little bit of an upward trend. And that's just because there was a recent interview with the CFO and she was talking about customer numbers and good things like that that made people, I think, start putting money into this position. But anyway, there's lots and lots of momentum building. I've been speaking about it, like I said, for quite a while now. But actually, when you zoom out, you can see that this stock is still about 80% down from its all-time highs. So there is clearly a lot of potential, a lot of momentum building. And now we just have to ask ourselves, are there enough bullish catalysts left in this company to actually drive this stock higher? I really like PayPal's fast lane feature. It's basically where a new guest can check out using PayPal extremely, extremely quickly. You basically just use one click, you put in an email and bam, you've checked out, which is a big, big thing. Because if you think about going onto a website and you're a guest on that website, you have to put in all your details, you have to go and get your card, put in all the numbers. It's a right faff and it can put a lot of people off, or it can delay the payment until later. But they found that with PayPal's fast lane feature, the guest checkout increases by 40%. And the CFO actually mentioned that 70% of customers are actually recognized by this fast lane enhancement, which then provides boosted checkout conversion rates, meaning more sales, more revenue, more money for the company. I think anything that makes it easier for the end consumer will do very well. And this is just one feature that they are using. And we can't forget that PayPal have been on such a transformation journey. They have got a completely new leadership team, an executive leadership team that is basically so different. It looks so different to what it did a few years ago. And that is, in my opinion, a really, really good thing for this company moving forward. Because there's no doubt that they have been quite stagnant. They haven't really grown in the way that they should for quite a while. But I really think things are changing. And don't forget, they have 5 billion in buybacks that they can actually use. And these buybacks are all going to be used using their free cash flow. So there's just so much to keep our eyes on when it comes to PayPal. But let me know in the comments below, is this a position that is in your portfolio right now, or is it one that you're maybe looking to add? Now, the second one today is just an absolute no-brainer in my opinion. It is one of the most asymmetric opportunities out there right now. It's one that I'm taking very, very seriously and have for quite a while. That is Tesla. Now, when it comes to the Magnificent Seven, there are a number of those companies that have been doing extremely, extremely well. Tesla stands out like a sore thumb. Tesla has been underperforming the rest of the Magnificent Seven to a whole new degree. Apple is struggling right now a little bit as well, but you know, Tesla more than any. And there could definitely be more pain ahead. This stock could go lower. And I think for short-term investors trying to time this, it could get quite challenging. But when we remove the short-term volatility and the fact that, yes, it could go lower, but for some people, including myself, this is just an opportunity presenting itself. I think when we think about long-term, for me anyway, I'm still very, very optimistic and positive about this investment opportunity. We can't forget that we're in Q1. And Q1 in general does tend to be quite painful for Tesla. And then we think about the macroeconomic situation. Again, it's no surprise that Tesla, and there's many other automotive companies, not just Tesla, it is more painful than maybe the likes of Meta, for example. And that all does come into play. Not everyone in the current environment is looking to spend money on a new vehicle. They're not looking to get solar panels. They're not looking to get mega packs, these companies that have been, a little bit more tight for cash given the environment that we're in. But this is all cyclical. This is all just a tiny percentage of Tesla compared to what Tesla's going to be in the future. The company is growing, and the company in decades to come, maybe not even decades, a few years to come, is going to look vastly different in terms of their revenue segments than they do today. And then we add on that the macro is cyclical, times will change as they always do. It seems to be a no-brainer. And we can't forget about what Tesla have already achieved. They are not a really, really old established company, really. And the financials, the fundamentals have come such a long way. They went from not being able to deliver vehicles very well, revenues being quite hit up, not being profitable, and then in a few years, a really, really short space of time, they have become a very financially strong company with 97 billion in revenue for a year. And what Tesla managed to achieve during those initial stages of growth can't be undermined. And this is something that I speak about on my main channel way more, that I'll leave linked on the screen if you are interested. But Tesla didn't have the production level, the production capabilities back then that they do now. Right now, they are in the position where they have economies of scale. And if you know anything about Tesla's manufacturing line, their production, their factories, their economies of scale, their vertically integrated systems, you will know that they are a true leader. When I'm looking at the Tesla stock chart, what I'm seeing is that right now, the current share price is about $162 per share. And that's kind of a very, very similar price to what Tesla was going for back in November 2020. But since then, Tesla has achieved so much, financially speaking and fundamentally speaking. So what this is telling me is opportunity, opportunity, opportunity. Since November 2020, Tesla's net income has improved dramatically, and it's currently about 21 times what it was back then. Revenue, about 3 times what it was back then. Cash to debt has improved. We've got the Cybertruck that is now a thing. It was announced before 2020, but it's become a thing now. Deliveries have started, consumers actually have them. Many celebrities have them. Model Y deliveries started. Don't forget, obviously, there was a stock split in August 2022, I think, a 3-to-1 stock split, which does impact the stock price, so bear that in mind. FSD has been improving significantly, and I think we are on the verge of hearing a big announcement when it comes to this. They've, of course, been opening more factories since November 2020. Optimus, the Tesla bot, they are working on that behind the scenes. We don't always hear about it, but every time we get a new video, again, significant improvements. That's going to change many things. All of the successes that we've seen with their supercharging network. Many other automotive companies have allowed their customers to access Tesla's supercharging network, and that area of Tesla, I think, will be absolutely massive in the future. And these are just some things. The list goes on and on and on. So to me, why not buy Tesla now when it's the same price as it was a few years ago, but yet the company, intrinsically speaking, is way more valuable, and that's why it made the list today. The next one that we have is definitely not as aggressive. It's not so much of a riskier investment as maybe some of the others on the list today. It's probably more for the people that, have a little bit of a lower risk appetite, but I definitely think it's worth mentioning, and that is Nike. Or Nike. Right now, Nike stock is just sitting above the $100 a share. There is definitely potential that it could drop to under $100, which I think would even make it more appealing, to be honest. But look, it's struggled over the last month to keep above the $100 mark. We'll have to see what's going to happen with this one. But there is no doubt that it's heading towards its 52-week lows if we see it actually start trending downwards rather than gaining a little bit more momentum on the upward movement. Now, I think it's very clear. I don't need to introduce Nike, but it is a company, in my opinion, that is very strong, fundamentally speaking and financially speaking. Lots of other athletic clothing companies and footwear companies seem to come and go over the years. There's been many Many that we've seen do very well, many that we've seen do well for a short period. There's been lots of hype, excitement, and then they sort of die off. But Nike seems to be the one that throughout many years sticks around. They have a very good reputation. They hold up their reputation extremely well, and they are just a leading company. Not to mention, if you like dividend income, this may be one that you want to look at as well, because they have had 11 years of dividend growth. Now, the yield is not the highest. I think it sits at about 1.4%. But in my opinion, if you're a dividend investor, yield maybe takes a backseat to dividend safety and dividend growth. Yearly revenue growth has been quite good. It looks quite strong. I don't love their cash to debt ratio, to be honest, but lots of other positive things about this company. And it's worth saying that earnings are happening next week. A lot of analysts have been cutting their price targets. Their 2024 sales outlook was pretty bad. It was pretty negative. It didn't sound too good from them. I think they said 1% growth, which obviously is not great, but they are doing lots and lots of cost cutting, which is positive. And who knows, they could just be sandbagging in a way. We'll have to wait and see what the earnings actually comes out as. Again, like we mentioned earlier on in the video, given the macro situation, the customer sentiment could be a little bit weak, but it could definitely improve as we look to the future, which then means better sales and better revenue. Now, like I said, I don't think this stock is going to give you that massive growth in your portfolio as maybe some of the others will, but it definitely does have an upside, and it is less risky. So with that all weighed out, could be one you want to look into. The fourth stock on our list today, like Nike, is one that I've never spoken about on this channel before, and I think it's probably Actually, I don't think it is the most risky option today. And for full transparency, this is not a stock that I currently own, but it is definitely interesting, and I will be doing a little bit of a deeper dive, deeper analysis to see if potentially I want to put some money here, but right now I don't own it. Anyway, it is BigBear.ai Holdings, which is quite a funky name. I quite like that, Big Bear. Not very forgettable. In case you've never heard of this company, which you may not have, they are a developer of data mining and analytic tools. Essentially, they are an artificial intelligence company, which is, of course, the absolute buzzword right now. Quite a lot of people make comparisons between themselves and Palantir. I don't think they are that similar when you actually dive in and you look at this a little bit deeper, but I do believe that they've actually had a partnership with Palantir, which could be an interesting one to actually look into. I guess one similarity between Palantir and BigBear.ai is that Big Bear also have a wide range of sectors that they can have customers from. So they have customers from the government and defense sector to the healthcare sector and many more, which is very similar to Palantir, which is really good. It's really good for investors because what that means is a big total addressable market, a big TAM. Oh, and it's worth noting as well that for a company that is quite small and upcoming, they do have some very notable customers like AWS. Now, the reason that I'm not looking at this company too seriously right now as an investment opportunity in my own portfolio is just because I would want to see a few more quarters of better financials, which could happen. You know, we could see a reversal of this soon. And if that does occur, I do think they would be a more appealing investment opportunity. But right now, it's just a little bit risky for my own liking. They did have a revenue decline between Q2 and Q3, but then you can see that it actually went back up between Q3 and Q4. So I will be eager to actually follow that trend and see if it continues moving upwards. Right now, I think actually SoundHound, which is actually really hard to say. Try and say that out loud right now, SoundHound. But I think those guys and Palantir, especially Palantir, are, they're not direct competitors, but if I had to pick, I would pick Palantir, one of my biggest positions, very bullish on that one, and SoundHound as well over Big Bear AI. But I'm not saying there's not potential. There is, just right now, a little bit risky in terms of the financials. The stock hasn't been having a good time very recently. You can see over the past 5 days down by 13.17%, currently trading at $2.44 a share, which is, it looks quite low. But then when you expand and you look at a 6-month period, you can see actually over the 6 months, they've been doing very well, up by just short of 50%. Very decent. And I think this is because of, the AI hype. And then we had Nvidia making an investment into SoundHound. Do you guys want me to do a whole video about this stock? Because that would be quite funny to sit and say for 20 minutes or so. So there has been a big jump, but it is very, very volatile. It's just going to be naturally one of those companies. And, if you max it out, you can see that they haven't been doing very well all time. But, maybe some opportunity here for the future. Something that's been going on with this company is that recently they acquired a company called Pangiam. This is a private company specializing in facial recognition. And that company also has an imaging technology called Dartmouth, I think it is, which basically is used to discern dangerous items from normal objects. So, a use case for this would be screening of baggages at airports. So, this is an interesting acquisition, because if you pair what Big Bear AI do with Pangiam, and obviously that is now owned by Big Bear, there is potential with these forces joining, especially in the government/defense sector. So let's now move on to the fifth stock today, and that is SoFi. Now, looking at SoFi's stock chart over the last 1 month, you can see it's been pretty brutal. And, congrats to you guys holding this company who have had very, very strong stomachs, focused on the underlying company, the intrinsic value. Good on you, because it's not been an easy time, but I do see big potential. I do. And I think right now, it's down by nearly 18% on the month. If anything, in my opinion, this is not financial advice. This is a buy the dip opportunity. SoFi's Q4 earnings revealed significant increases in both the total net revenue and net income, surpassing all analysts' expectations and forecasts, which was a big win across the board. We also had the CFO forecasting a 75% expansion in the financial services sector and a 20% increase in the tech platform division for 2024. So they are seeing potential here. There's lots of prospects of big future growth. Also, about 30% of the total product purchases have actually been made by current members, by current customers. This is a cost-saving advantage to SoFi, because what this means is they don't then need to spend more money trying to acquire new customers when they've already got customers in place that want to spend more money. For the sake of repeating myself and going too in depth with this one, I have covered this company in quite a lot of detail already on this channel before, because like I said, they're going to keep coming up all the time that I'm seeing potential. So, check out previous videos if you want to learn more, and I will try to leave one linked on the screen now. But I guess this graph is the nicest of them all. It's very, very pretty, and it shows that members are growing. Look at this. You couldn't really picture a more perfect graph. And then we have the fact that net income is positive. But let's just address the elephant in the room before we move on. They did recently announce a 750 million convertible note offering. And because of this, the stock plummeted. The stock saw a big drop given in one day of about 15%. So the market didn't like this news. I do think that although it sent fear throughout the market, it was a tiny bit of an overreaction in my opinion. I think this is still a very, very good company. Because actually when you look into this, all they're trying to do is improve their debt structure. There are many fintech stocks right now that are pretty exciting. We have Robinhood, we have PayPal, we have SoFi, we have New Holdings. And let me know, which of the fintech opportunities are you most bullish on for 2024? With that said, don't forget, become a channel member if you want to submit which stocks you want me to analyze live on the live streams that I will start soon. Thank you so much for watching this video. Until the next one, keep analyzing, keep investing, and don't forget to hit that subscribe button.